What's up, everybody? So we have a crazy week ahead. We got CPI. We got CPI coming out this week. But on top of that, I'm curious right now: is there going to be a line at all the banks tomorrow morning? You know all the big YouTubers. You've seen all the thumbnails. It's crash. It's fire. It's shocked faces. We got what was it, Silvergate? We got the one no one's ever talked about ever. Silicon Valley Bank. Anyway, wrecked. FDIC shut them down. They're taking over. They got some extra employees in there just to kind of make sure people get their deposits. I'm actually very curious how many people in that bank have over 250,000 in there, because I thought that was a pretty. I thought most of their clients did. So remember that insurance only covers up to 250 grand. So seeing it not. Anyway, I'm just curious how that's going to pan out. It's going to suck for those people if you had more than 250,000 in there. So overall, my thoughts going into this week are going to be, before we even get to CPI, like what's going on with this banking situation? Is it a lot worse? Because we kind of ended the day Friday. Charts did not look good. I know the futures did open up. We opened up red, dropped it down, and then we see this pop up. I've been getting notifications all day on Bitcoin as well. Bitcoin, crypto, anything I've ever touched, like I don't like it, but like my phone just notifies me, hey, this is up. And crypto's had a good day today, so I'm not sure what's going on, if there was a news catalyst for this or anything. This is all stuff we're going to talk about on the Don Franz Show. So again, this is Don Franz Trading, everything pre-recorded. Don Franz Show. I'll go live 1 hour after futures open to kind of talk about everything in a little more detail. Also, I love to take questions in there. So the only thing you need to be is subscribed. You can jump in the live chat, answer questions, or ask questions, get my opinion on. Anyway, so I'm not sure. I don't really chase the news or any catalysts like that, but I'm kind of curious, is there one? What was said over the weekend as far as are we going to calm this thing down? Because the way I see this bank situation, and it's more... the way I see this bank situation going is we sweep this under the rug. It was like a short-term catalyst for last week. The market has like a 90-minute attention span, so the fact that this kind of played out at the end of last week, we've had the weekend to calm down and forget about it, or we've had the weekend to just sit around it, mull it over, get panicked and freak ourselves out, sit in that echo chamber of just fear, of just nonstop panic, and then Monday morning it's time to get your cash out of the banks. The more likely scenario is that we forgot about it. Very legitimate risk that they didn't. And because what it's seen as, even though you've never heard or even talked about Silicon Valley Bank, it kind of like, it raises the question, how many banks are sitting in the same spot they are? Because what happened on that bank run, that's when you find out just, what's it, when the tide pulls out? When the tide goes away or something like that, you see who's swimming naked. And I think it's raising the question of how many banks are out there naked like this. How many banks are just leveraged ridiculously wrong? And the burden is on the proof of the bank now. It's kind of like when FTX collapsed. Everyone else was just fine, but no one believed it. Like, hey, you need to show me, because everyone thought FTX was fine too until this happened. So it's kind of like the burden is on the proof. The burden of proof is on the banks this time. So I'm sure we'll figure this out as it unravels, but I'm very curious as to what happened. Did we bring on that fear or not? And I got to say, this green open doesn't give me the answers. It's cool. It's cool that it's green. If it was this size red to the downside, I'd say panic and fear. We were already a little oversold, so if anything, this is just a better entry for the bears. As it sits right now, we are still trending down. Things are still rocking and rolling to the south side. But if we're rocking and rolling to the south side, we're already oversold, and then things sell anymore. What that's telling me is it's landslide, like avalanche time. It's time to, like, any put will do. Just grab it, short this market, get some short exposure. You're going to be just fine. Hang on, Yahoo Finance. Money available. So I just got a notification on my watch from Yahoo Finance. U.S. government guarantees Silicon Valley Bank deposits money available Monday. Is it all your money, or is it just the FDIC insured part? Because if you're rocking $1 million in there and they're going to give you 250 grand, that sucks. Right now, it looks like we're rallying off that news. But let's go over the expected moves like we normally do. We're talking about what we're pricing in for the week, what market makers have priced in. As far as last week goes, we went just out. So we went outside, and then we went for it. So closing just the end of the day, just outside 2 standard deviations. This is 1 standard deviation. This is 2. The Russell got decimated. 1, 2, 3, almost 4 standard deviations. It was 442 last week. Now that's rare. That's crazy. So you would need a well, financials lead the Russell, and right now you need something like last week to happen to really send it this far. That's a landslide. Obviously, that's what carried, echoed throughout the markets. So let's pull up TOS here. Let's get our what are we on? We're on Tesla, 1255. 1255 actually seems kind of small because it's usually been like 14 around there, as high as like 17 bucks. So 1255 seems kind of light. I figured we'd be, let's see what the markets are, because I figured we'd see more of a move, even with CPI. CPI plus any last minute decisions made over this bank. All right, S&P 1185. Now that's higher because if you guys remember last week, it was for the Qs that were 1 penny off, 785 and 784. So now we're rocking 1185. All right, as far as the Qs go, we got 1002. That is higher. IWM, like again, last week was $4 move, and right now 714. So let's chart this out. So we're clearly pricing in some volatility right here. Again, so if you're new here, the market makers take all this options data and that's how they hedge. This is everything they're hedged and accounted for. Everything's fine. It's when we get outside this first move, things get volatile. Remember, inside these two lines, inside this range, it's you and market movers. Okay, when you get outside, it's you, market movers, and market makers. I know everyone loves to use market makers like, oh, they're out to get you. They're really not. Their whole job is to remain a neutral position, neutral delta. If you're long 50, they're short 50. Like, they sold the position. That's why. So if you went long 50, puts them at a negative 50. So automatically putting them there, actually they got to go long 50 to neutralize that out. So in every sense, they're actually helping everybody out. When you get into these death spirals like that, that's because people are seeing red, they're buying puts. Now, when you buy a put, the market maker is now at a positive delta, and they need to be neutral. So now they got to go short shares, because options are what drive like order flow for everything else. Like futures will drive like the SPY. The SPY is just an index, but that's where like the inflow, like the money comes from. So when you go out and buy ridiculous stuff, this is where the ridiculous stuff pans out. You're out of the money. They don't care about it yet. Once it's in the money, they now have to hedge for it to get that neutral. So again, you buying a put is negative delta, putting them at a positive delta because they're the ones made that market for you, and you got it. So now they're sitting at positive. They have to short that in shares, which is sell side activity, which brings things even down. And that's why you see these spirals, or you see these crazy like rips up when it happens. A lot of people are attributing this to 0 days to expiration. I like to watch the weekly, but that's happening. That is happening day to day. It's not a 1-to-1 ratio. The closer to the middle it probably is as it fans out. Probably not. Just playing the numbers game. Add this stuff out here, not even accounted for. So again, these are not support resistance lines. Before I forget them all, let's switch to the daily. Let's write all these things down. So it was 714 for IWM. On the money. So even bouncing a full standard deviation, not best case scenario. Like if that a best case scenario for the week, that's a lower high. That sucks. 714. All right, there's that. Oh man, one standard deviation down, and we are at a lower low on the Russell, ultimately kind of keeping a very range-bound market. Let's just draw this out real quick. And again, I don't zone anything out on these. It's really kind of pointless to zone these out. That's why I watch the futures, because futures are what drive that order flow. So very range-bound for this. I'm going to set an alert right here. Might be time to buy that thing down there. Oh, never mind. I forgot. Trading View wants to jack around with me. Anyway, let me get that fixed. Set an alert. That alert for me is going to be right at 164.50. Let's go with QQQ. Save that. All right, this was what, 10:02. All right, 10:02. Let me know why I'm doing this, guys, in the comments down below. Are you just bullish no matter what? I see people in the comments all day long. Oh, market's gonna rip. Now they say that all the time, And but they'll be right this week. So if we keep going the way we are, the futures are green. Are you just bullish no matter what, or are you looking for a short entry, or do you think that was a close one, got the best dip buy ever? Let me know. I do like to hear how. The more you guys comment, the more I recognize how you trade and who you are, which does help me out answer your questions. But I do like to hear everyone's excuses and reasoning. I'd say a lot of people in the comments so far, a lot of the people I've seen are neutral over the weekend, which is rare because usually everyone is like gung ho one way or the other. This is what, 1185. Come on, you guys see that? You guys watching the screen right now? I can't. Like 1190. Like just go to 1183. That probably annoys a lot of you guys because you just don't care, but it bugs me. 1183. We're pricing a move. We do have CPI this week. The only thing I'm looking out for as far as CPI goes, if we're bullish, I am going to short the market. And it's a no doubt about it. There's a gamble regardless. It's like an earnings report. It's a binary event. So what that means is there's going to be an announcement. It's going to go up or it's going to go down, right? Both sides, every scenario can be skewed both green or red. So the reaction to me is more important than the actual story everyone's telling. And right now it could be a 50 basis points. It could be 25 basis points, 25 with an announcement of an additional 25 at the end. Like, it's all cool. I think it's a ladder. I think we're going to do 25 and announce maybe an additional 25 unless this bank fear just brought it right back to we're going to keep 25 in and keep an eye on these banks. But what I look out for is I just call it a volleyball play, where you see in volleyball you have to set the ball and then you just spike it, where you just hammer it down over the net. And so I've made plenty of jokes about this. I've done this a million times. Just kind of how I would play reports like this. They set it up, and I joke, hey, it's a volleyball play. Somebody wants cheap puts. How do you get cheap puts? You send it up, you buy the cheap puts, you load up, full send south. Obviously, it's very tinfoil hat theory. Call it whatever you want. That's what I do. And that's kind of the play I'm looking out for. I would rather go short. The last thing I would want to do is go long on like a red day. Like, we're just trending down way too much to just be thinking sunshine and rainbows. Let's go. I really would rather markets pop up so I can short it. March Madness is running Invesco QQQ ads again, all-time highs. We'll see. U.S. regulators bail out SVB customers who can access all their money Monday. Okay. All their money. Man, so sounds like they want to nip this in the bud fast. Like, if everybody finds out the dollar was a giant lie, we're screwed. We got to hammer this thing. Tell them they're fine. We'd rather cut one stimulus check now than trillions later. All right, anyway, those are expected moves. I'm going to wrap it up here. Let me know in the comments down below. What do you guys, what are you thinking? What are you feeling? What are you doing? Yeah, more importantly, I want to hear about your opinion if there's money involved. There's enough people that just type stuff. If I'm going to read your comments, I prefer you have some money on the line. At least I know, like, you believe in what you're saying. Like, I don't want to hear you say all-time highs, but you're short the market. I don't want to hear you say all-time highs if you haven't bought a single thing. Like, how can you believe so much in something and not have a position in there? It'd be like Kathy Wood saying Tesla to 25,000, but we don't own any Tesla shares. All right, garbage. Throw that away. Thanks for wasting my time. Anyway, let me know. Subscribe. All the cool stuff. All the links are in the description. Patreon group, Tier 1. I don't know what we're going to buy this week, but if you're part of Tier 1, it's $5 a month. Again, we started January with $0. We're doing $150 a week, and we're growing that account. So I post everything I do in there. My forward calls did not fill, so hopefully it's a green Monday so we can sell some forward calls. So watch out for that alert. If you guys don't have the app, you guys get email notified, but if you have the Patreon app, it should notify you instantly. Anyway, be on the lookout for that. Everyone else, I'll see you hopefully on Don Franz Show. See you in the next video.